Morning. So as they say, I also stand on existing protocols. It is an honor personally and a privilege, and on top of that, a responsibility to address you today at this landmark event, the fifth in the series of the Money Summit, where together we tackle one of the most pressing challenges of our time: optimizing investments and pension management to ensure sustainable retirement income while driving economic growth. This summit's theme is particularly timely as the world, and in particular Ghana, grapple with an evolving economic landscape. You agree with me that global markets are increasingly volatile, and the challenges posed by demographic shifts, inflationary pressures, tariff wars, and geopolitical instability are becoming more pronounced. These challenges have amplified domestic concerns, such as the recent Domestic Debt Exchange Program, DDEP, which nearly disrupted investor confidence and undermined long-term retirement savings. For pensioners and for other long-term investors, the key question remains: how do we safeguard retirement income in an era of economic uncertainty? I believe that this summit will showcase the urgent conversation about how we as a nation and as a financial sector can optimize our approach to investments and pension management. The present need for diversification, coupled with sound regulatory frameworks, offer a critical opportunity to reshape our financial outlook and future. Let's look deeper into the current state of investments and pensions in Ghana and explore practical, actionable solutions that will safeguard the future of pensioners and promote sustainable growth in our dear country. Our country, like many others around the world, is facing significant changes in its investment landscape. For years, traditional investment vehicles such as government securities, real estate, stocks, fixed deposits, and the like have been the mainstay of players, including pension funds. However, our dear friend DDEP, which involved the restructuring of Ghana's debt obligations, has forced investors, including pension managers or pension fund managers, to rethink their strategies. As we have seen, the DDEP impacted confidence, particularly in government securities, as pension funds experienced significant reductions in their valuations. And here I'm emphasizing pension funds, knowing very well that as banks, we were the greater investor population that was really hit the hardest in the DDEP. As a result of the domestic debt operations, the yield curve on government securities has become inverted. The investor experience of this phenomenon serves as a critical learning point for the need for diversification. Diversification, particularly into alternative investments, is not just a strategy for pensioners. It must become the cornerstone of our national investment strategy moving forward. In line with this, it is important to note that alternative investments such as equity investments in private enterprises, real estate, and the recently launched Ghana Gold Coin, corporate notes and bonds, commercial papers, and even green energy investments have shown considerable promise in recent periods. Commercial paper, for instance, which was introduced for the first time in our country just a few days ago, offer a viable alternative to government securities with short-term fixed returns and reduced exposure to the macroeconomic risk associated with government debt. Commercial paper could serve as short-term liquidity management tool as well. Investors, particularly pension funds, must now seriously consider these options as part of their broader strategy. Obviously, in line with asset allocation requirements from the industry regulator from time to time. The introduction of green investments funds and green bonds offer another opportunity. As global attention increasingly shifts towards sustainability, the demand for investments that support environmental sustainability is growing very fast. This trend is also visible in Ghana. For example, government's commitment to renewable energy has encouraged institutional investors, including banks, to diversify into renewable energy projects. These projects not only offer promising returns, but also contribute positively to economic growth and towards our march to a more cleaner world. The importance of diversification cannot be overstated. In 2020, the Global Investment Report by BlackRock indicated that portfolios that are diversified across asset classes outperformed traditional bond-heavy portfolios during market downturns. The report highlighted that a diversified portfolio, especially those that incorporated alternative investments, were able to mitigate and deliver higher returns over longer periods. For Ghana, these findings underscore the need to move away from heavy reliance solely on government securities and invest in diverse asset classes. A clear example of the success of diversification can be seen in the Norwegian government's pension fund Global. The fund, which manages over $1.3 trillion, has adopted a diversified investment strategy that includes equities, real estate, private equity, and infrastructure. This diversified approach has protected the fund from market fluctuations and has also positioned it as a key player in the global investment landscape. Aside the portfolio management strategy, the government appointed, and here I'm talking about the Norwegian government, appointed professionals with the right experience and skill set to manage these national pension funds. Nobody at this stage is barring the government of Ghana from venturing into business. But once our government ventures into business, it must embed private sector mentality in how these businesses operate. I therefore call on our political parties to at all times ensure that the Social Security and National Insurance Trust, SNIT, leadership team is always fit for purpose, and their term of office is not mixed up with SOEs whose leadership tenure is coterminous with the political leadership change. If Ghana can emulate the Norwegian model, leveraging diversification within our own pension funds, we can mitigate the risks associated with economic volatility and promote long-term financial stability for our pensioners. As the conversation shifts to pensions, the reality of an aging population, rising life expectancy, and a growing gap in retirement savings become evident. According to the International Labour Organization, ILO, the global pension gap is expected to exceed over $400 trillion by 2050, with developing countries like Ghana particularly vulnerable to the repercussions of insufficient retirement savings. In a release by NPRA, the National Pension Regulatory Authority in Ghana, the average monthly pension payment remains inadequate to cover the living costs of our retirees. This issue, if left unchecked, will only deepen in the coming decades as the population continues to age. Current pension system in Ghana, while a critical lifeline for many, is far from perfect. A major flaw lies in the lack of diversification of pension fund portfolios. Much of the pension fund assets in Ghana is still concentrated in low-yielding Government of Ghana securities. This approach, though historically safe, has in recent years proven to be no longer a default-free safe haven in today's economic climate. The time has come for a shift that embraces alternative options in our investment portfolio. Pension managers must broaden their scope to include real estate, private equity, and infrastructure investments, and must push for a more diversified asset allocation in the pending amendment to the National Pensions Act. These assets, despite their inherent risks, provide returns that are more likely to outpace inflation and provide sustainable income streams for retirees. And here I'm referring to myself as well. We are all heading there. For instance, some banks have started diversifying their investment portfolios by introducing funds that focus on sectors like real estate development, agriculture, and green finance alternatives. This move not only secures the future of our investors, but also contributes to national economic development. By prioritizing these alternative asset classes, pension funds in Ghana could see improved returns and better protection for our pensioners from market volatilities. Ladies and gentlemen, one of the critical areas that need urgent attention is the professional management of all pension funds, particularly SSNIT, Ghana's largest pension fund. For years, it has been alleged that some investment decisions have either been politically influenced or have not been in the best interest of contributors to the scheme. And this has resulted in suboptimal fund management. Successive governments, while having vested interest in the health of the pension system, must not politicize its management. Pension fund managers must be held to professional standards that focus on professionalism, performance, transparency, and long-term sustainability. This shift can be started by removing alleged interference in investment decisions and prompt payment of pension deductions to fund managers, ensuring that decisions are made by qualified professionals with expertise in investment management. The commitment by the government to making state-owned enterprises more profit-oriented at this stage is therefore commendable. If we can replicate this in the management of SSNIT, we will build a pension fund that not only supports retirees, but also plays an active role in stimulating economic growth. One of the most pressing issues that we must confront urgently and address in Ghana is the seeming low levels of financial literacy. According to a recent survey by the World Bank, only about 27% of Ghanaians are financially literate. This statistic is alarming, especially when we consider the increasing complexity of financial products available today. Oftentimes, we tend to tickle ourselves with financial inclusion data, which is way above 70%. But financial literacy is even more critical. Without a strong understanding of how investments work, pensioners and retail investors will continue to be vulnerable to making poor decisions that could jeopardize their retirement savings. Financial literacy is not just about understanding the technicalities of stocks or bonds. It's about understanding risk management, asset allocation, features of financial products, and the importance of diversification. It is about empowering investors to ask the right questions, demand better financial products, and hold pension fund managers accountable. Institutions must make concerted efforts to educate the public, particularly pensioners, on how to manage their investments and prepare for the future. This effort requires collaboration between financial institutions, regulators, and educational bodies. To this end, the banks in Ghana, through the Ghana Association of Banks, is supporting the Center for Financial Literacy Education Africa in their efforts towards deepening financial literacy education in our markets, in our schools, churches, mosques, hospitals, and what have you. The goal is not just to promote investment, but to build a culture of informed decision-making that supports sustainable financial outcomes for individuals and the broader economy. In today's complex financial landscape, investors, especially pensioners, must adopt a proactive approach to managing their portfolios. Gone are the days when investors could simply set and forget their investments. Even passive investors need to stay informed about the broader economic environment, as events such as the DDEP demonstrate how government fiscal policies can directly affect their investment outcomes. It highlighted the importance of staying informed about government debt management and fiscal position. As investors, it is not enough to simply make investments and wait. We must monitor the sectors in which we invest and ensure that they align with our long-term investment goals. Another critical takeaway from recent events is the need to establish a fair balance between investments that protect our principal and are easily convertible to cash and those that promise decent long-term upside. The days of chasing high yields at the expense of capital preservation are perhaps over. In an environment where risks are high and the potential for loss is ever present, ensuring that one's investment portfolio can withstand market shocks is paramount. This is especially true for pensioners whose need for cash can be quite pressing and often comes unannounced. As we age, our ability to work and generate income decreases, and therefore having liquid, secure investments becomes essential. We need to focus on assets that not only provide steady returns, but also offer easy access in times of emergency. Whether it's T-bills, bonds, commercial papers, real estate, gold coins, fixed deposits, mutual funds, and all the other collective investment schemes, the goal should be to create a portfolio that balances growth with safety. To conclude, the future of investment and pension management in Ghana requires a fundamental shift in our approach to risk, diversification, and governance. We must embrace alternative investments and build financial literacy and ensure professional management of our pension funds. By doing so, we will not only ensure that pensioners have sustainable retirement income, but also foster an environment where economic growth and financial stability go hand in hand. I thank you for the audience. I'm very hopeful that the deliberations today will result in all of us getting educated more and preserving our financial flows during our pension and retirement periods. Thank you and have a wonderful day.